Okay, let's unpack this. Trying to get a handle on a company like Costco, with all the information flying around, reports, analysts' takes, news, it's a lot.
It really is. You've got the financials, the earnings calls, the headlines, research.
Mhm.
It's easy to get buried.
Exactly. And that's what we're trying to do here. What does this material actually tell us about how they're doing, their business, and, what the buzz is right now?
Yep. We'll take all the numbers, the expert opinions, the latest news, and kind of boil it down, give you a clear picture, quick and thorough, based just on this info.
Think of it as your fast track to feeling up to speed on Costco, strictly from what's in these documents. So let's get into it.
Okay. Started with the basics from the sources. Costco, or Costco, is a membership warehouse club. Pretty straightforward. They're in the consumer defensive sector, specifically discount stores.
And they are huge, right? The sources talk about this global scale. US, Canada, UK, Mexico, Japan, Korea, loads of places. It even mentions a target, what was it, 914 warehouses by the end of fiscal 25?
Yeah, up from about 815 back in August 21. That scale is, well, it's key to everything they do. They sell a massive range of stuff, branded goods, their own Kirkland signature private label.
Everything from groceries to electronics, yeah.
Right. And then you've got all the extras, the pharmacy, optical, the food court, gas, travel,
Hmm.
and their online business, which is growing fast. It's really meant to be, a place you can get almost anything.
And this whole setup is what the sources say gives them that wide economic moat rating. Sounds impressive.
It is. A moat just means a competitive advantage that's hard for others to overcome.
Yeah.
And the material points to two big things for Costco's moat. First, the membership itself. Those fees are recurring income, high margin.
Ah, right. So the profit comes mainly from the fees, not so much the stuff they sell.
Largely, yes. That lets them keep merchandise prices incredibly low, which builds that value perception. Yep.
Which then loops back, right? You pay the fee, get low prices, so you feel like you should shop there more to make the fee worthwhile. Clever.
Exactly. And that fuels the second part of the moat, cost advantages. Because they're so big and buy in such huge volumes, they get great deals from suppliers.
And pass those savings on. Makes sense.
And you really see how well that works in the membership numbers highlighted in the sources. Loyalty is just off the charts. Renewal rates worldwide are over 90%.
90.2% globally, and even higher, like 92.7% in the US and Canada. That's incredibly sticky.
It is. And the member base itself keeps growing. The sources say 79.6 million paid households, up almost 7% year over year. And those higher spending executive members, they grew even faster, up 9% to nearly 38 million.
More members, especially more executive members. That means more of that reliable fee income.
Precisely. It's the engine.
Okay, so that's the structure, the foundation. Let's talk recent performance. We've got their Q3 25 report info here, came out May 29th, and the May sales data from June 4th. What did Q3 look like?
Q3 was solid. The report covered the period ending in May. Net income hit $1.9 billion. That's a significant jump, over 13% higher than the same time last year.
Wow. And earnings per share?
Came in at $4.28 per diluted share.
Good numbers. What about sales, the top line?
Also strong. Net sales reached $61.96 billion, which is up 8% year over year. If you look at comparable sales, that's sales in stores open at least a year.
Right, stripped out the effect of new openings.
Yeah, total company comps were up 5.7%.
And if you adjust for things like gas price changes and foreign exchange?
It looks even better. Adjusted comps were up 8.0%. And the sources showed this wasn't just one region carrying the load. U.S. adjusted was 7.9%, Canada 7.8%, other international 8.5%. Pretty consistent strength.
And e-commerce. That seems to be a recurring theme of strength in these reports.
Absolutely. E-com comps jumped 14.8% or 15.7% adjusted. The material highlights things like gold, jewelry, toys, major appliances driving that. And they specifically mention growth in big, bulky items delivered via Costco logistics. Saw a 31% increase there.
Interesting. Let's dig into the margins a bit from Q3. Gross margin.
Gross margin actually improved, which is good news. It was up 41 basis points year over year, so like 0.41%.
What drove that improvement?
According to the sources, it was a few things. Better leverage from higher sales in fresh foods, some commodity costs coming down, think dairy, olive oil, and also better margins in some of those side businesses like gas and e-commerce.
Okay. But operating expenses, SG&A, those ticked up a bit.
They did, yeah. SG&A was up 20 basis points reported, or 11 adjusted. The material mainly puts that down to wage investments from recent labor deals and a catch-up on vacation day accruals. Higher sales helped offset some of that, though.
Got it. And back to the membership fees, that high margin engine.
Still humming along. Fee income grew 10.4% or 11.4% without the currency effects. And the sources do note that a recent fee hike contributed about 4.6% to the fee income just in this Q3 period.
Okay, so strong quarter. But what about looking ahead? The sources talk about growth and investment, right, more?
Definitely. Warehouse expansion is still a big focus. They opened 9 in Q3, 10 more planned for Q4. The goal for the whole fiscal year 25 is 24 net new warehouses that bring the total to 914.
Wow, that's a lot of building. Must be expensive.
It is. Capital spending CapEx is projected to be over $5 billion for the fiscal year.
Mhm.
The sources sort of position this as a sign of their confidence in the long run, but it's not just physical stores.
Digital too, like that buy now, pay later thing with Affirm on the website.
Exactly. That was mentioned in the news section of the sources. They're also working on making the online experience more personalized. And inside the warehouses, they're testing tech like Scan and Go, pushing digital membership cards, basically trying to speed up checkout, especially at really busy locations.
Makes sense. Those lines can get long.
Right. And they also mentioned that opening new, strategically located warehouses actually helps take pressure off the existing busy ones, too.
And Kirkland Signature, their own brand, still doing well.
Yeah, continues to outperform their overall sales growth, according to the material. It's becoming a bigger and bigger piece of the pie. They also mentioned efforts to source Kirkland stuff more locally in different international markets, which can help with costs and, you know, tariff issues.
Okay, so strong model, good recent results, clear plans, but every company faces challenges. What headwinds did these sources mention?
Inflation and tariffs were definitely flagged. The sources noted non-food inflation was the main reason for a $130 million LIFO charge in Q3.
LIFO charge.
Yeah,
That relates to inventory costs going up, right?
exactly. Last in, first out accounting. When costs are rising, LIFO results in a higher cost of goods sold, reflecting those newer, more expensive inventory costs. They even estimate another $40 to $50 million LIFO hit in Q4 based on current trends. Though they do say overall LIFO inflation in their U.S. inventory is still kind of low, like 1 to 1.5%.
And tariffs. How are they dealing with those extra costs?
It's a factor, for sure. The material says they're using their size and network to manage it, finding different suppliers, shifting goods to markets without the tariffs, buying inventory early, making more stuff locally. Raising prices on shoppers is really the last thing they want to do, according to the sources.
What about the supply chain overall? Is it smooth sailing now?
The sources describe it as relatively stable, but delivery times are still less predictable than before COVID. However, a key point mentioned is that because they can track most of their shipping long-term, they're somewhat shielded from the recent spikes in spot shipping rates we've heard about.
Okay. And you mentioned the amazing renewal rates earlier, but was there a little footnote or something about volatility?
Yeah, a slight one. While the overall rates are still fantastic, the sources did acknowledge a very slight dip recently in the worldwide rate. They seem to pin this on a couple of things. Members who signed up via a Groupon deal back in fall 2023, and more people signing up online initially.
And online signups have lower renewal.
Slightly lower initial renewal rates, apparently. So the company says they're working on improving that, communicating more with those members, encouraging them to visit the warehouse.
Interesting nuance. Okay, let's shift to the stock itself. The sources had valuation data.
Right. The material cited a recent price around $1,051.69. And one source specifically gave a fair value estimate of about $1,004.18.
So based on that source's math, the stock price is currently above their fair value estimate.
That's exactly how that source presented it. Their conclusion was basically, great company, good results, good outlook, but maybe the current stock price already reflects all that good news, suggesting less room to run up based on their numbers.
But importantly, the sources also mentioned other analyst price targets, right? And they weren't all saying the same thing.
Correct. The material noted the average analyst target from the last 6 months was $164.17. And it listed some specific recent targets from late May 2025, like $1,100, $1,035, $1,045, $0.10. So you see a range of views there among the professionals cited.
Which leads nicely into the bull versus bear points that were summarized. This is basically the gist of those differing analyst arguments, yeah.
Exactly. The sources lay out the bull case, focuses on Costco's undeniable strengths, that powerful membership model, the value, the moat, their consistent performance, all the growth plans like new stores and digital, Kirkland Signature's power, their global buying leverage, all the stuff we've talked about.
And the bear side, what are the main worries highlighted in this material?
The bear arguments mentioned tend to zero in on that potential valuation issue. Is the stock just too pricey right now based on fundamentals, according to some views? They also flagged that slight membership renewal wobble with the newer signups, the external cost pressures like inflation and tariffs showing up and things like that LIFO charge, and rising operating costs from wages and such. It shows you where the debate is.
And the sources also threw in a couple of other quick hits, like the May sales numbers.
Yeah, May sales came in at $20.97 billion, up 6.8%. Just reinforces the ongoing sales momentum. And little snippets like Costco testing big change to checkout or the Affirm deal, those are specific examples from the news flow in the material, tying back to those tech and digital investments.
Okay, so let's tie this all together for you, the listener. After digging through these specific sources, what's the takeaway for you when thinking about Costco?
Well, you've seen the picture painted by this information.
Yeah.
A company with a really strong, seemingly very durable business model, that clear moat. You've seen the evidence in the recent numbers, strong sales, good comp growth across the board, growing membership, and they clearly have plans to keep investing, both in physical stores and online. Plus, they seem to be actively managing the challenges thrown at them, like inflation and tariffs.
But, and this is important from the material, you've also seen the discussion around valuation. Is the current price perhaps running ahead of some fair value estimates? And you see the acknowledged challenges managing those operating costs, the slight complexity around renewal rates from different sign-up channels, and those external cost hits to the financials.
Right, so looking at all these pieces, from the sources, the hard data, the operational stuff, the analyst views, the news, it gives you a more complete perspective. You see the strengths, definitely.
Yeah.
But you also see the specific points that analysts and the company itself are watching closely or debating right now based on this material.
It helps you understand not just the what the numbers, but the why behind why certain things are strengths and why other things are points of focus or potential headwinds, according to this analysis.
Precisely. It's about context.
Which kind of leaves us with a final thought, drawing directly from that tension we saw in the reports. Given Costco's obvious operational muscle, their track record of growth, that powerful membership model, how much weight should you, as someone trying to understand this, give to the current stock price relative to those fair value estimates mentioned, or to those specific concerns raised about costs and renewal nuances?
It's definitely the key question to mull over after digesting all this information from the sources.
Absolutely. Well, we've covered a ton of ground based on the material provided today. If you found this deep dive useful for cutting through the noise and getting the core insights on Costco from these sources, please do subscribe to this YouTube channel. And hit that bell icon too. That way you won't miss out on future deep dives where we break down the information you need to stay informed.
Hope this was helpful.
Thanks for tuning in.